All right, good afternoon. Welcome back here to Traderman, and great to have you aboard. Just jumping on, share my thoughts on the market here today and what is going on, and look at positions here. I put a post in the feed earlier today, just kind of talking about what we do know of this market. And I think there's a lot of analysis going on out there, trying to derive meaning from so many things. And I think a lot of it's frivolous. I think a lot of it doesn't have to do with anything. Looking at yesterday's market, oh no, it sold off 20 points into the close. Does that mean it's going to go down? No, okay, gaps. Right? It's one of those where the movements within 20, 30, and even 40-point ranges on this market doesn't have a lot of significance as to what's going to go on going forward. And we've talked about why. The market doesn't know where to value things because things are actually pretty darn cheap if the trade stuff subsides and really actually gets better with China. And things are pretty expensive if that situation escalates. So investors don't really know where to value things. They don't know, okay, you know what, IBM, I know they're not tied directly to China, but you know what, they're tied to the market. And if the market's 5% too expensive because of the China deal, IBM's going to go down 5% and vice versa. Right, and you could go to Caterpillars and you're the Caterpillars of the world, and you're talking even a bigger level, right? And so we're seeing a lot of that. And I know yesterday, the market sold off, opened up, sold off, and today gapped up. And most things are kind of like Caterpillars, sitting near where they were yesterday at the close or yesterday at the open. A lot of things that are just kind of in that position here, and it's a very common technical position with things. For me, trading comes down to, from an option trading, specific option trading for the challenge standpoint, it's like any market, risk-reward exposure, right? And my exposure is about $1,000 right now, about $1,200 right now. And, that's a little higher exposure than I've had, but it's nowhere near what I want exposure-wise normally. And a lot of that just has to do with option values. The option values are just plain and simple. They're just ridiculous. I mean, you come into a Caterpillar, you take a look at a Caterpillar, and you come and you look and you go, okay, next week's options 360 has a 50-cent delta. All right, I need my stock to move about $7 to break even, or excuse me, to get a double, a $7 move to get a double. Can it move $7? Yeah, it sure can, right? But if it sits and grinds here in between 124 and 127, what's going to happen to that option value? Right, it's going to collapse. I mean, I have Alibaba, right, and this whole options are expensive concept isn't enough to keep me in all cash, but I'm not willing to get more exposure than what I have. And, I have this going on with Alibaba. I mean, Alibaba, the stock's up nicely since I got in, right? I mean, the stock's up, what, about $3.20, somewhere around that area since I entered the position, maybe $3.50, right? And if you look at the position, just doing kind of a normal option, well, it's worth, what, $6.70? I mean, I'm up $85 on on the contract. I got it for $6 and it's at $6.85, and that's with the stock going $3 over 2% in my favor. That's the implied volatility bleed that's in these things. And so, can I make money on this option? I sure can. If Alibaba, moves up $4 tomorrow, yeah, I'll make $400, $500 on that option, sure, right? But if it decides it's just going to dink around in this area, you know what? It doesn't matter that I got the stock direction correct. The option isn't going to make money. Now, there's two ways to counteract that. You go deep in the money or you deal with a spread. But deep in the money, you have kind of you don't have a great risk reward. And I don't trade those, for the challenge, right? So, for me, I look and I go, okay, yeah, I like Alibaba. I think it has some nice potential to the upside. I'm willing to take that risk there, but I'm not willing to take more risk because with that option element. It's just too upside down right now, for me to take it. Now, yesterday, what did I do? I said, okay, well, we have this. Options are kind of expensive out there. I don't know if they're going to get cheaper tomorrow or the next day or the next day. And I've had several people ask me about VXX and, does this mean that you think this and that you think – no, VXX, my position in VXX has nothing to do with what I think, has nothing to do with my outlook on the market, has nothing to do with anything except for risk-reward exposure. We have an element out there right now where we know that options are expensive on a relative basis. We also know that going into this time of year, we oftentimes will see a volatility crush. Okay. I risked $300 on something that could be worth even $2,000 by the time it's all said and done. Now, for it to be worth $2,000, I would need the VXX to go to 35 by Friday. Is that unrealistic? Is that unheard of? It's probably aggressive. I mean, it's not something I'm going to, go, mortgage the house and bet everything that's going to 35. But I can have $300 turn into $2,000 if it goes to 35. If it goes to 37, what's it worth? It's worth $1,000, right? And these aren't huge targets to the downside. And so for me, you know what? VXX may go to 44 tomorrow. I don't have that vision or that crystal ball to tell me that it's not going to go to 44 tomorrow. It could easily go to 44 tomorrow. We could have President Trump tweet out, "Hey, things are going terrible with China. China, buzz off. I'm raising tariffs 50%." VIX is going to go to 50 on that scenario. But we also could have Trump tweet out and say, "Hey, things are going really well. This is actually looking better than expected. We're building a really good relationship here." And the market take a collective sigh of relief. And then that $300, which, if it's worst case scenario, I lose minus 300. Best case scenario, I'm plus 2,000. I don't have to be a predictor. I don't have to be an analyst. I don't have to sit here and talk about the stochastics. I don't have to look at any of that. I just know that these are both legitimate possibilities. And you know what? For a little bit of exposure, I'm willing to take that risk. Because I think this is a much greater possibility than what the options are pricing it in at. Now, I don't have much time. Granted, I don't have much time. I also don't have much to do with analyzing a 20 to 30 to 40, even a 50-cent move in the VXX. Okay, the VXX is 50 cents off its lows. Well, it's off its highs too, and it's one of those where trying to put a bunch of analysis into it. That's not why I got into the trade or anything of that nature. I got into the trade risk-reward for very little exposure. And, this is something where most likely I will be holding it come Friday afternoon near the market close. And whatever it closes at, I will look to take it. Okay. And I know that that's not, always popular with everybody and whatnot. But at the same time, these are the type of trades I do a lot personally. And I told you I was going to bring a lot of personal flavor back into the challenge instead of having to justify or discuss every little move that's out there. So anyway, going to hold my VXX here. And going to hold my Alibaba, and it's something where, look, I know the market could change 40, 50 points into the close. We've seen it multiple times, and I don't expect that will happen today, but I know it's a possibility. But, Alibaba closing here, $1 lower or $1 higher, it doesn't really change it. It doesn't really change it here. And, this is something where, we saw the nice little hourly, action in it and in some tech. We had the gap up and fade yesterday, the gap up and kind of holding here today. This is something I would not be surprised to wake up and see trading at 158. 158, 159, and so I'm willing to take that risk here. But I have essentially $1,000 at risk. I'm not willing to put more of it out there in what this market is, because I do know that the chance is a little more elevated that I wake up and the market's down 4%, 5%. That's a legitimate possibility, right? It's not enough to scare me out, right? It's not enough for me to just go, better wait, better totally. I mean, that's not the challenge. I want something into the challenge. Occasionally I'll go to cash here and there, but it's one where I do want some exposure here. And right now, when I look at the market, when I look at where the metrics lie, I look at where the balance is. I think the market's slanted to the downside, expecting a little bit to the downside, and and to see a little bit more upside come into play before more downside, is kind of what I suspect will happen in the short term. And again, I don't have a crystal ball. I don't have any any magic power to tell me that. But I do know, okay, I can take that suspicion. I can add some risk reward in some interesting areas, and this is kind of how I've chosen to do it here. I look at things like a Bank of America today. In the financial sector downgraded, and it's some interesting action, but we're still not. It's still not set to close above the prior day's highs, right? If you look at J.P. Morgan. It's outperforming today. It's holding up, but it's also still not set to close above the prior day's highs. So I look at these banks and I still look and I say, okay, not all that interested. I'd be a lot more bullish on the market if the banks were rallying. I'd be a lot more constructive on the market, but I do think the lack of bank rally still, shows some of the skittishness and some of the fears, that are in the market, out there, and reasonably so. But some of the financial components, like in American Express, it's set to close above yesterday's highs. It could still fade a little bit, but it's set to close above yesterday's highs. Visa, it was earlier. It's not now, right? You see how fast some of these are changing. But both of these look like they're in a little bit of consolidation mode still. Johnson & Johnson, which I've talked about, looks like it's going to close above 147. This is something where I look, do I sell my BABA? I go after some J&J. Do I just go after some J&J? I'm going to, I may regret it, but I'm going to let others jump into J&J, and I will, if it decides to surge to 150 here, I will be missing out. Anyway, that's the decision I've made there. But overall, it's a market where options are still, we're going to still see, they're expensive because the actual movement that can happen. And so I'll keep my exposure where it is. I'll run with BABA and VXX into the close. BABA I'll assess as it moves and goes. VXX, most likely, I will be holding it Friday afternoon, and wherever it is, I will take it. And if there's nothing to take, then I will move on from it. But, maybe an exception if we see it down $3 tomorrow morning or something like that, where it makes a really sharp move to the downside. And I just say, you know what, I can't resist. I got to take this. But overall, would love to see this thing gap down about $1.50 and then just bleed tomorrow. But it's probably not going to do that unless the market gaps up 8-9 points tomorrow. If the market gaps up 30 points, it's probably not going to bleed all that much. You got to keep in mind also that, the market's still moving at a pretty rapid pace through some numbers. And, you need for that to calm a little bit for the VIX to, VXX to go on down. For those that like the little technical signals, we definitely have that turn down right off of 80 on the stochastics, which we haven't seen all year with the VXX. We saw a turn up off of 20 right here. And, you saw the result. And, go back to voodoo technicals. You don't see it very often. Just the pure roll-off 20 or the pure roll-off of 80. But pure roll-off of 80 tends to be very bearish, and a pure roll-off of 20 very bullish. I have no logical explanation for why, other than it just historically tends to work. All right. So anyway, I'm going to go into the close like that. Now, market metrics here today, they're shifting. They're a little bit higher. We're not seeing a massive shift in them. I mean, you look at the bullish percent index. It's okay. Not much there, right? We're not seeing a huge shift. We're not seeing a huge shift in the volumes. We are seeing a few more stocks moving up above the 7-day moving averages. Let me pull that up here for you. We looked at this yesterday. But you see, we're up to, 37% of the stocks moving above their 7-day moving averages. So that's a decent number, but that's not the bullish number that we tend to see. What we tend to see when the market goes from bearish to bullish is we tend to see this number go from something like 89 to 90 to 100, somewhere in that 80 to 120 range, and jump up into that 360 to 400 range really quickly in a matter of 1 to 2 days. We don't see that, right? We don't see that. Some of that has to do with the depth of the drop that we saw last week. But, we're still not seeing it. The number is still controlled by the bears. Market vibe, when I pulled it here, was at a -8. So really has not improved in a dramatic way here today. It's something that, when I look at it, I kind of read the same thing into it that I have. Market hit oversold down at -9. Now bounce risk is higher, but we've had bounce, right? We've had bounce, and the one thing after a bounce in an oversold market is the downside risk starts to return. The downside risk is greater than what it was down here, when the market was lower. But overall, not a whole lot of change in terms of the market metrics here today. So anyway, those are my thoughts on positions on BABA, on VXX as we go into the close here. And again, I'd expect I expect that these could close quite a bit different from where they are right now. But I do not believe that in this when we look at what's going on, the last hour action is typically action that I find to be very important. But over the course of the last weeks, the last hour action has not had any import at all in terms of any predictability into what's going to happen going forward. And I don't think today will be any different. So we may see a big rally into the close. We may see a big sell-off into the close. We may see flat into the close. And I don't think that will say anything about what's going to happen going forward. I think what's going to happen going forward is going to be driven by the next headlines for the trade negotiations. And, yes, fundamentals, earnings, they drive things, economics, they drive things long term. But in this short term right here, with those trade negotiations, the big moves are going to be driven from the headlines on that. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.